Happy Friday, Brian Manning here. It's Jobs Week again. I can't believe that the month's just rolling by. We got lots to talk about. I know you haven't seen us for a couple weeks, but let's talk about all kinds of crazy stuff this week. So first of all, Monday, this week we had the PCE. That's the Personal Consumption Expenditure. This is the Federal Reserve's favorite gauge of measuring inflation. We don't really think so. We really look at the CPI. We've talked about this before. The reason why I say that is because the PCE does not include out-of-pocket housing or medical expenses, but nevertheless, it's what the Federal Reserve looks at. So PCE rose the core rate from 1.6 to 1.9%. Core rate means they strip out the volatile food and energy. So here we are seeing inflation really at the 2% target. 2 months ago, this number was at 1.5%. So certainly seeing inflation steadily rise there. Headline number was a miss. Came back flat. So the headline number is inclusive of volatile food and energy. Really gave the markets a sigh of relief because the headline number did not show much in the lines of inflation. Also got pending home sales. Pending home sales for the month of March were up 0.4%. Amazing to see this nationwide. Still in the face of higher rates and lower inventory, pending home sales are up 0.4%. Another thing to look at is first-time home buyers. First-time home buyers still at a low number, and with rents increasing across the U.S., it's finding it harder for first-time home buyers to actually save money to go through and purchase their first home. Tuesday this week we get CoreLogic. CoreLogic gives us some information on the national housing market. On a national basis, from March of 2017 to March of 2018, housing prices appreciated nationwide at 7%. Unbelievable. So still seeing strong housing market nationwide. Wednesday this week, our first little taste of jobs data. Every first Wednesday of every month, we get the ADP report. ADP is the largest provider of private payrolls. Usually taken with a grain of salt, but worth looking at. ADP said they expected 190,000 new jobs to be created in the month of April, and they got 200,000. So not bad, and kind of the precursor to today's report, which we'll talk about in a minute. Thursday this week, we get a Fed statement, kind of a joke. Same thing. Federal Reserve puts out their statement and says, oh, inflation's in line with where we're at with 2%. Duh, we've been trending towards that for a while now. So kind of a joke what their statement was. Today, the big jobs number. And there's a little bit of information for us to look at here. So first of all, the jobs report was a miss. Analyst expectations was that we'd have 190,000 new jobs created in the U.S. For the month of April, we got 164,000 new jobs. The big number was the unemployment, the headline number, reduced down to 3.9%. But why are the markets not reacting to this kind of number? Because usually this would send stocks soaring and bonds tanking, and we wouldn't see really good benefit here for mortgage rates. But what's also looked at is what's called the household survey. So the household survey is when households across the U.S. were contacted. And in the household survey, it's revealed that only 3,000 jobs were created for the month of April. So nowhere near in line with what the BLS says. Why is this? Because through discovering in the household survey, it was also seen that 236,000 people left the workforce. So, and what was already really an anemic labor force participation rate, which is at 62.9%, the labor force participation rate actually dropped down to 62.8%. So now we're seeing high demand for jobs, people leaving the workforce, people retiring, people that couldn't find jobs, whatever it could be, but 236,000 people left the workforce. So that's what's giving what seems like a very strong unemployment number, but markets really aren't reacting to it because of this household survey. A lot to digest this week. Hope I didn't talk too fast. Only 2 shots of espresso this morning, trying to keep it easy today. Happy Friday. Have a great day. I'll talk to you soon.